Hello, ladies and gentlemen. My name is Greg Michalowski, and this is a morning look at some of the technicals that are driving the currency markets in some of the major currency pairs. Let's start off with the euro versus US dollar. At this time yesterday, the price was trading above this swing area defined by a swing low right here, swing lows here, swing low here. Then we moved below that level and had swing highs here before moving to the downside, testing, or not testing, but getting below the 1.00 parity level on our way to 99.51. Over the last 3 trading days, the price had moved higher, and in trading yesterday, the market moved above this swing area, looking for the 50% retracement level up at 1.02829. The price couldn't get to that level, so what we do, we move down to again to retest this swing area. The buyers are trying to stay in control, keep the bias going, and in today's trading, the market moved up, breaking above the high price from yesterday, but still falling short of the 50% retracement from the June 27th high. That level, the level today came in at 1.0272, about 10 pips short of that 50% retracement level. Market moved down, tried to test a swing level once again, moved up, fell short of the highs, and then broke below that level, tilting the bias back to the downside in the short term. We since have moved below this trend line and also below what was another, let's say, swing high area right here. We had a double top right here that kept the price under that level on this day right here. 2 days ago, the price moved above that level, fell short, moved back down. So so here we are trading above and below that level and below the trend line. This area right here is now resistance. Buyers turned to sellers through here, and now this is resistance. So I would expect that sellers would lean against that level, try to keep a lid on it as a result of that failure above it and the failure to get to the 50% retracement level. On the downside, a move back toward the 100-hour moving average is not out of the question. So watch that level at 1.0127 and rising. That may be where we're going in the short term if the buyers cannot get the price back above that swing area. Let's take a look at the sterling versus US dollar next. And in trading yesterday around this time, the price was in this swing area through here, outlined with swing low, swing high, moved a little bit above that level and then reestablished the level. It also represents a 50% retracement. Swing high, swing high, swing high, swing high, swing high. All these swing highs at this level. Also, the 50% retracement level was the target that we were looking for yesterday. We had to get above that level to give the bias more positive boost. It didn't. It moved right up to it, found sellers against that level, moved back into that swing area in trading here today, not once but twice, and then failed again. As you can see, we're now testing we did test in the current hourly bar, a downside trend line level, which comes in at the low today at 1.19545. Get below that level is more bearish. Watching the 38.2% retracement. Now, as you can see, we just went up and tested that level. If the price can stay below that level in the short term bias remains to the downside, with the downside trend with this upward sloping trend line as the next target to get to and through. If we move above that level, then we're back sort of into the range up here above the 38.2% retracement and maybe above these swing levels through these levels through here, and we dodged a bullet from the bearish perspective on the corrective move to the downside. So key support here, watch 38.2% retracement for short-term bias clues, at least in the intraday. And ultimately, if the price is going higher in the pound versus US dollar, we need to get above this swing area and also the 50% retracement level. Yesterday and today, and even the day before yesterday, the price held against those levels. Let's look at the dollar versus yen. And the dollar versus yen yesterday at this time was testing its 200-hour moving average. The price couldn't get below that level, and we saw the price move back above the 38.2, back above this swing area defined by swing high here, swing high here, swing lows here, swing low here. Moved below that level in trading yesterday, moving down to the 200, and then reestablished support against the 38.2 against the swing area through here. In yesterday's trading, moved up toward the 100-hour moving average, and that was a peak in trading here today. Since then, the price has been waffling up and down in trading today between the 100-hour moving average above at 138.358 and this swing area below, defined by the 38.2% retracement, and also swing highs and lows down to 137.742. Those are the levels that traders will be looking for the next shove. Get above the 100-hour moving average, a more bullish move below this swing area, and below the now rising 200-hour moving average of 137.69 would be more bearish. The Bank of Japan will meet in the new trading day tomorrow and announce no change in policy, which should keep a floor to the dollar versus yen. But the technicals will tell the story, so watch those levels. The levels are defining the trading range, defining support and resistance. They will define what will be the next move from a technical perspective and from traders' bias standpoint. Finally, let's take a look at the dollar versus Canada. We had inflation data come out a little bit weaker than expected, with the month-on-month up 0.7 versus 0.9% expected. The year-on-year inflation came in at 8.1 versus 8.4. The common inflation reading was a bit higher, though. However, at 4.6 versus 4.2%, that beat the 4.5% revised level from last month, which originally was reported at 3.9. Nevertheless, the Canadian dollar is weakening on the headline inflation number, coming a little bit weaker than expected. The dollar is getting a little bit stronger. As we can see in trading here yesterday, the price moved below this swing area, swing high here, swing high here, swing highs through here, highs, low, swing low here, and then moved above it and tried to use that level of support through here. Couldn't, then turned back to sellers through here. You get the point. Yesterday or 2 days ago, we came down, test that swing area, found support. Yesterday we came down and through that level, and then use the level as resistance, and now we are trying to move back above that level. That will be key. We also fell below the trend line here yesterday and tried to stay below that level. So we're back. We're trying to build back to the upside as a result of the weaker CPI data here today. And on the top side, we have resistance at 129.322. Swing low, move below that level, reestablish the level, tried to hold support against that level, fell below that level yesterday, and moved to the downside. So watch this level as resistance on the top side. If we get above that level, that increases the bullish bias. If we stay below that level, the battle is going to be between the swing area here and that level on the top side. Also, watch this trend line in this the lower end of the swing area in trading in early trading today. Move back below that level, and the move to the upside could be thwarted, and the market moves on to other ideas for the dollar versus Canada that would be more in favor of the sellers than the buyers. So there you have a look at it for currency pairs. So my name is Greg Michalowski. If you like this video, give it a thumbs up. Also, you can share it on your social media. We'd really appreciate that. Good fortune with your trading. Bye bye now.